You know what it's like being a dad of three? Every single day you wake up and something's on fire somewhere. Someone's crying, someone's out of cereal, someone did something to someone, and nobody's talking. And your job isn't to panic, it's to stay calm, figure out what's actually on fire versus what just feels like it is on fire. And the goal is to get everyone moving in the right direction again. That's kind of exactly how I feel about this mortgage market right now. There's a lot of noise. Iran, oil prices up again, Fed day today, rates still elevated. It can feel overwhelming. But if you stay calm and look at what the data is actually saying, there are things worth paying attention to. And there are things that are just, well, someone crying over cereal. Stick around. I'm going to break it all down, what's real, what it means for you, and what you should actually be doing about it. Quick intro if you're new, I'm Asher Benjamin. I'm a loan officer and senior loan specialist with Nexa Lending. I've been lending for upcoming on 8 years, and before that, I was a high school math teacher. I'm an Arizona native and a die-hard Chicago sports fan, and as I mentioned, I'm a dad of three. Three kids, three completely different personalities, three different ways of telling me I'm wrong about something. Honestly, I love it, and it's great training for working with buyers, realtors, and everyone in between. I've gotten very good at staying calm when everything feels chaotic. If this is your first time here, hit that like button and subscribe. Every week I cut through the noise and tell you what's actually happening in the mortgage market and what it means for your life. No fancy charts, no weird jargon, just the real picture. So let's start with rates because that's what everyone wants to know. The 30-year fix is sitting right around 6.75 as a national average this week, essentially flat from last week, which is actually the story in itself. After weeks of watching rates climb, they've leveled off. They're not really dropping yet, but they're also not spiraling. And today is Fed Day. The new Fed chair, Kevin Warsh, is holding his first major meeting, and the market is watching very closely. No rate cut is expected, and there's actually about a 1 in 3 chance of a rate hike being discussed, though most of the analysts don't think that's actually going to happen. What the bond market is hoping to hear is some movement on the Fed's balance sheet, which is a signal that they're tightening in a more targeted way. If Warsh delivers on that, the market could actually respond positively. We'll see. Tomorrow we get the first reading on the second quarter GDP and the June PCE inflation report, which, if you recall, is the Fed's favorite inflation gauge. The headline is actually expected to drop from 4.1 down to 3.7%. That would be welcome news and largely thanks to oil prices pulling back from their recent highs. Well, what does this mean for you? If you're a buyer, today's Fed commentary matters more than today's rate. Words from Warsh could nudge things in either direction over the next few weeks. This is not the week to make big decisions based on a headline. This is the week to be in conversation with your lender, which is exactly what I'm here for. If you're a realtor, purchase apps and refi apps, well, they've been flat week over week. Your buyers aren't panicking, but they're being patient. Keep the conversation going. The clients who stay engaged now are the ones who move fast when rates shift. Here's the one that I actually want you to feel good about though, because in a week full of noisy headlines, this one got buried and it shouldn't have. Mortgage defaults leveled off in June. The overall delinquency rate came in at 3.55%, and that's well below the pre-pandemic average of 4.16%. In other words, despite everything, rates elevated, affordability stretched, geopolitical chaos, the average American homeowner is still paying their mortgage. That's a sign of genuine financial resilience. Even better, serious delinquencies, which are borrowers who are 90 or more days late, fell to their lowest level in 6 months. Fewer people rolling into trouble in June than in May, and fewer than this time last year. That is a real positive signal. Now, I want to be balanced here because one number deserves a mention. Active foreclosure inventory did hit a 6-year high, and foreclosure starts are elevated. But here's the important context. High home equity is the safety net. Most distressed homeowners right now have enough equity that they can sell rather than foreclose. They're not trapped. That's the big difference between now and where we were in 2008. Homeowners back then didn't have a cushion, it just didn't exist. The headline though is not foreclosures are rising. The headline is the housing market has a buffer that's protecting most homeowners even in a tough rate environment. That's the story worth telling. Okay, so this next one is specifically for anyone buying or selling condos or any realtor working in the condo transaction world. This is important and it's happening soon, next week, so pay attention. Starting August 3rd, just days away from now, Fannie Mae and Freddie Mac are eliminating their abbreviated condo review process. What that means in plain English? Well, if you're buying a condo in a building with more than 10 units, the loan process just got a little more involved. Previously, many condo purchases could go through what's called a limited or a streamlined review, which is a faster, lighter touch approval process. But as of August 3rd, most of those will now require a full project review. That means documentation around the condo association's budget, reserves, insurance, inspections, and any special assessments. And here's the tricky part. A lot of that paperwork is controlled by the condo board, not us, not the lender, not the buyer, the condo association. If the condo board is slow, disorganized, or unwilling to produce those documents, it can stall or kill a deal. This is especially important if you're in somewhere like Florida, where more than half of the conventional condo loans in recent years use the streamlined process. That pipeline is about to get a lot more complicated. Well, what should you do? If you're under contract on a condo right now, talk to your lender today. Don't wait until August 3rd. And if you're a realtor working with condo deals, make sure your buyers are working with a lender who knows exactly what's coming and has a plan. That's the kind of thing I stay on top of so your deals don't fall apart at the finish line. So here's the honest truth. Until the geopolitical picture stabilizes, rates are going to stay volatile. It's not a forever statement, it's a right now statement. The inflation data we get tomorrow is expected to show improvement. Rent prices are actually trending down on a year-over-year basis. The underlying fundamentals outside of oil are really moving in the right direction. The path to lower rates is real. It's just not a straight line. Sound familiar? Kind of like getting 3 kids out of the door in the morning. The destination is the same. The journey is just, well, eventful. Here's where we land this week. Rates are holding, not great, but stable. The Fed is meeting today, and what Warsh says matters. Delinquency data is actually encouraging, and if you're anywhere near a condo deal, August 3rd is a date you have to have circled right now. The market is noisy. It's been noisy for a while, but noisy doesn't mean impossible. It means you need someone in your corner who's paying attention so you don't have to do it. Whether you're a first-time home buyer trying to figure out if right now buying makes sense, a move-up buyer weighing your options, an investor watching the data, or a realtor who just wants a lending partner that keeps you ahead of changes like the condo update, I'm here to help. Call me, text me, email me, drop me a comment below, or send me a message. Doesn't matter where you are in the country, I can help you directly or connect you with someone who is going to be exactly the right person. If this was useful, please like the video, subscribe so you get this every single week. The market moves fast and you deserve to know what's happening before it affects you. I'm Asher, stay calm out there, and I'll see you next week.